Hi everyone, my name is Harsh Srivastav, and in today's video, I am going to shed light on why I am investing in Trent Limited, a Tata Group company that is focused on branded retailing. If you are new here, then do subscribe to this channel because I keep coming up with these kind of interesting personal finance videos. So without any further ado, let's get started. To understand the origination of Trent Limited, we'll first have to dial back a few decades. So in 1952, under the chairmanship of Mr. J.R.D. Tata, Lakme Limited was incorporated to facilitate Tata Group's entry into the cosmetic industry. Later on in 1998, Lakme decided to divest its cosmetic business in a strategic deal to Hindustan Unilever because it wanted to pursue apparel retailing business. Consequently, in March of 1998, Lakme acquired Littlewoods International India Private Limited, which was already in the business of ready-made garments and related merchandise. What Lakme had actually done was that it amalgamated one of its subsidiaries, that is Lakme Exports Limited, with Littlewoods International India Private Limited, and this merged entity was named Trent Limited. What is more interesting is that on 1st of July 1998, Trent was amalgamated with Lakme itself and the name Lakme Limited was changed to Trent Limited. And that is how Trent Limited came into existence. Now, before we move on to the financials of the company, let's dive a little into the business of Trent Limited. Trent Limited currently runs under the chairmanship of Mr. Noel Naval Tata, and it emphasizes on strong product disciplines to create a coherent business model. This includes ownership of product design and curation, focus on speed of concept to market, and consistency of offers across channels. Currently, Trent's business can be divided into two major categories. The first category being own concept stores and the second being Trent's alliances. Let's first discuss about the own concept stores. Under the own concept stores category, Trent Limited operates Westside, Zudio, Utsa and Landmark Excite stores. If I talk about the number of stores, then there are 214 plus Westside stores, 352 plus Zudio stores, 17 plus Utsa stores and 7 plus Landmark Excite stores. These numbers are as per the 2023 annual report. But without a doubt, these numbers are totally vague until and unless I give you a reference point of where these numbers stood a year before. So to list down, as per the 2022 annual report, there were 200 Westside stores, 233 Zudio stores, 6 Utsa stores and 6 Landmark Excite stores. Now you can clearly see the growth in the number of stores, but what is really interesting right now is that the company is aggressively growing the number of Zudio stores. For those of you who aren't aware, Zudio basically offers fresh fashion at affordable pricing. At the same time, you can also see that Trent has more than doubled the number of Utsa stores, which focuses on providing women with Indian ethnic apparel, beauty products and accessories. With respect to the company's flagship concept, Westside, the number of stores grew by 14. Lastly, one store was added to the Landmark Excite business, which focuses on providing an array of products such as tech, games, stationery, t-shirts, etc. to Gen Z and millennials. Moving on, let's now take a look at the second category, which is Trent's alliances. Under Trent's alliances, it operates Star Bazaar, Zara stores and Massimo Dutti stores in India. When it comes to Star Bazaar, it is basically a 50-50 joint venture between Tata and Tesco. For those of you who haven't heard about Tesco, it is one of the world's largest grocery and general merchandise retailer based out of UK. At present, the number of Star Bazaar stores in India stands at 63. Now, coming to Zara and Massimo Dutti, these two brands fall under the umbrella of several brands that are run by the company Inditex. Which company is Inditex? Well, it is a Spanish multinational clothing company which tops the list of world's biggest fast fashion group. Trent has two separate alliances with Inditex to facilitate the distribution of Zara and Massimo Dutti products in India. The shareholding split of this alliance between Trent and Inditex is 49:51. Now that we have dissected the business of Trent, let's dig a little into the financials of the company. The revenue of the company is growing rapidly, especially in the recent years because of the aggressive expansion of Zudio stores that is being done by the company. From 2018 to 2023, the revenue of the company has grown from 2,157 crores to 8,242 crores, which is roughly a 4x increase in revenue. In percentage terms, the 5-year sales CAGR for Trent is 31%. Following the growth trajectory in Trent's revenue, the net profit of the company has also risen from 87 crores in 2018 to 394 crores in 2023. Consequently, the earnings per share of the company has also been rising. Now, without a doubt, if a company is performing so well, then it will definitely translate into a high compounded annual growth rate in the stock price of the company as well. If you look at the stock price of Trent Limited in the last 5 years, then you can see for yourself that it has risen from 352 rupees in August of 2018 to 1691 rupees in August of 2023. This means that the shareholders' money has become 4.8 times in just the last 5 years. This makes for an impressive stock price CAGR of 38%. Now, the next thing that I usually see in a company is the debt situation. At present, the debt to equity ratio for Trent Limited is 1.72, which is on a higher side. The good thing though is that the company is still profitable even after paying such hefty interest amounts. More importantly, an investor should take into consideration that it takes a lot of capital to open new retail stores, and so Trent is simply using debt to expand its chain of stores. With respect to the valuation as well, some proponents believe that a trailing 12-month PE of 134 is on a really high side, and so the company is overvalued. But the thing is that the markets are giving higher valuations to Trent because the company plans to aggressively grow the number of stores and cater to an even bigger customer base. It plans to add more than 200 Zudio stores in FY24 alone. If Trent is able to achieve this mammoth target, then we can definitely see a huge push in the top line of the company, and then the valuation may seem justifiable. The focus of Trent right now is to provide fast fashion clothing to the mass population, and that too at an affordable price. With this strategy, Trent can really become a behemoth clothing retailer in India because of 3 major reasons. One being the fact that India's population is growing at a tremendous pace and that 65% of the population falls under the age bracket of 15 to 64 years. The second reason is that a vast percentage of population is expected to migrate from rural areas to urban areas in search of better opportunities and lifestyle. To quantify this, currently 36% of the population lives in urban areas, and as per a survey by United Nations, this number is supposed to reach 40.76% by 2030. And the last reason is that India is expected to become the world's 3rd largest consumer economy in terms of consumption by 2025. There is a high possibility for this because of several factors such as increasing household income, shrinking family size, and growing retail channels across India. If we talk about the analyst targets as well, then Motilal Oswal has a target price of 1835 rupees and ICICI has a target price of 2030 rupees. So to conclude, with growing middle class population and rising disposable income, Trent Limited is placed at a sweet spot with its brands Westside, Zudio, Utsa and Landmark Excite. At the same time, due to strong parentage and experienced management, Trent Limited can probably continue to be a multi-bagger as it has been in the previous years as well. Hope you found this video helpful. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.